Joining us now, we've got Jonathan Corpina, Senior Managing Partner, Meridian Equity Partners. All right, Jonathan, it is great to see you this morning. New month. We got some green on the screen. I'm matching it.
You're wearing your green?
It was not on purpose. So let's talk a little bit, though, about how we closed off April. Mixed finish, but you saw this big rally in the close, shaking off that weak economic data that we had, showing that the first quarter of the year contracted. That was weaker than estimates. ADP coming in weaker than estimates. I know that's not the NFP print, but how did we manage to shake that off?
Yeah, let's keep in mind just how fragile this market is and how much it's just yearning for information. So even though the economic print in the morning wasn't as hopeful and what we were expecting, as the day went on, I think people kind of put that behind them and were looking forward, right? And what were they looking forward to? After the close yesterday, we had Microsoft and Meta earnings that were coming out. If you look at earnings season overall, putting outlook aside, earnings season has been pretty good. And I think pretty good is a good headline to base that off of. So I think there was some expectations that Microsoft and Meta were going to do well after the close today. So I think there were some people trying to get ahead of that. And then once the market starts to turn, the algos start playing catch up. You get a little bit of a snowball effect. FOMO comes into play, and then the market swooped up like that. But overall, clearly a lot of volatility in April. Down 10% at one point, and we were able to claw back from that. So it's going to be interesting going into May. Everything that we talked about in April, the impacts on the markets, we have a little bit of clarity on some of those issues, but not a ton of clarity, right? We still talk about the Fed and what the Fed's going to do next week. We're talking about tariffs, and maybe there's a little clarity there. Maybe there's a little clarity in the geopolitical issues that are out there, but nothing really solid changed in the month of April, in my opinion. So we're going to have to see how this all plays out.
No, you make a great point. The Treasury Secretary was on Fox this morning, and he mentioned that he's expected to have conversations with Japan. But again, we don't have a trade deal yet. We had at the beginning of this week hearing from the Commerce Secretary Lutnick that a deal was coming soon. We still don't have one yet. Is the view that once we have something more concrete from here, then we have a template going forward, especially when it comes to trade policy?
I do. Once you get this first one done, I think everything else is going to fall into place. I think more recently, the White House has done a better job of giving just little
telegraphing.
Just a little bit of information, right? I mean, the headline that came out yesterday was U.S. reached out to China for talks, right? We haven't had a headline like that before. I think that added a little bit of positiveness to our markets here. So I think once we get through one or two deals, if we can work out something with Russia, Ukraine, we'll see how our talks go with China. Just these little baby steps. I think some expectations are when you're talking about these deals, when you're talking about interest rates, that things are going to switch immediately and go right back in the other direction. It takes time. It takes a lot of effort to go there. So I think if we start getting these little baby steps, it's going to be viewed positive overall.
No, you make a great point that I think the view sometimes is that it's going to be extreme that the pendulum's going to swing in an extreme fashion. But when I look at the CME Fed Watch tool, it doesn't look like there's any expectation for a move on rates next week. The pendulum's not going to swing that far.
It's not. And again, the expectations cannot be that things the Fed's going to flip a switch and things are going to go back to where it was. And we could debate where it was actually where it should have been, right? But we've got some good earnings reports coming out after the bell today. We've got Amazon and Apple. I think investors are feeling good about that. Next week, we're going to hear from the Fed. It's going to be the same blueprint that we've heard before, as it should be, right? They're going to remain data dependent, uncertainty of the economic and the administration policies going forward, geopolitical risks that are out there. As I said before, we've made little baby steps in certain areas, but nothing solid. So that would mean the Fed has to sit on their hands for now. I'm sure they do want to make a move at some point. I think they do know that at some point that is the right decision. Now is not that time. And I think people can't be upset or spooked by that.
And let me ask you this. I remember the old adage, sell in May and go away. Is that out the window this time around because trade policy is so top of mind?
This is a new world that we're living in, new experiences that we're going through. I know history repeats itself. I know the sayings that are out there. But what we experienced in the last 6 weeks in this market, I've been doing this for a long time. You've been here for a long time. These are things that we really haven't seen before. So it's going to be interesting to see how May goes. I think there's way too much on our calendar and way too many items that are in front of us where the adage of sell in May, go away, because we're not going away.
I was going to say, no one's going to take a vacation.
None of these issues are going away. There is no, summer break where things are going to get slow, because things are going to continue to progress. And that's what we want. We want it to progress. So hopefully we'll continue to see trade activity moving forward.
So VIX sitting at 24. So volatility, as you pointed out, has seriously come down by the end of April. We're starting a new month. Do you expect volatility to see an uptick in volatility this month, or just,
Yeah, I don't think we're out of the woods just yet as far as volatility is concerned. Again, our markets are very fragile. One headline is going to move this market 1.5% either way, right? And that headline might not be warranted to move the market, but that's how the market's going to react to that. So I do think we still have a lot of volatility. I like to see the VIX trading sub 25 where it is right now. I don't know how long it's going to be able to stay in that range there, because this can pivot very quickly at any given moment. So just stay tuned. But I think long run, long term, we're moving in the right direction. Economic data is supporting positiveness. I think we're going to make some deals as far as tariffs are concerned. U.S. Ukraine will make some progress there. All these little things are going to add up to a big picture.
All the little things will add up to a big picture. And then we've also got jobs data in front of us tomorrow. So that's the big last data point for the week.
Yes.
I know we have some jobless claims coming out in moments from now. We'll have to leave our conversation there. That's Jonathan Corpina, Senior Managing Partner, Meridian Equity Partners.